Good day Forex trader. The pair will likely keep falling as the risks to the European economy continues. Bearish view. Sell the EUR-USD pair and set a take profit at 1.0500. Add a stop loss at 1.0610. Timeline, 1 day. Bullish view. Set a buy stop at 1.0600 and a take profit at 1.0700. Add a stop loss at 1.0500. The EUR-USD price crashed to the lowest level in 5 years as concerns about the Eurozone economy continued. The pair fell to a low of 1.0513, which was significantly below its highest level this year. Concerns about the Eurozone economy. There are serious concerns about the Eurozone economy as the energy crisis continued. On Wednesday, the price of European natural gas prices surged to an all-time high after Russia's Gazprom stopped supplying oil to Poland and Bulgaria. The company insisted that it will restart its supplies only if these countries start paying in rubles. Therefore, the EUR-USD declined because analysts expect that Russia will impose the same restrictions for other European countries like Germany and France. As such, there are risks that the European economy will experience a major recession this year. Therefore, investors believe that the European Central Bank, ECB, will be slow to end its stimulus in a period of stagflation. On the other hand, the Federal Reserve is expected to continue being more aggressive by hiking interest rates and starting its quantitative tightening, QT, policy. The pair also declined as investors rushed to the safety of the US dollar as the number of COVID-19 cases kept rising in China. Officials there have announced some strict measures, including lockdowns and strict testing. As a result, there is a likelihood that the global economy will see some weakness in the coming quarters. The EUR-USD declined as the US dollar continued its strength. The dollar index moved above $102 as the currency rose against other key currencies like the Japanese yen, Swiss franc, and sterling. The next key data to watch will be the second estimate of the US Q1 GDP data. The first estimate showed that the economy expanded by 7.6% in Q1. The pair will also react to the ECB bulletin and the bloc's consumer and business sentiment data. EUR-USD forecast. The EUR-USD pair continued its bearish trend as risks to the global economy continued. It fell to a low of 1.0507, which was the lowest level in 5 years. It is slightly above the third support of the standard pivot points. It also moved slightly below the 25-day and 50-day moving averages. Also, the pair is along the lower side of the Bollinger Bands. Therefore, the pair will likely keep falling as the risks to the European economy continues. The key support level to watch will be at 1.0500. GBP-USD Forex signal may find support at $1.2500. Today's GBP-USD signals. Risk 0.75%. Trades may only be entered today between 8 a.m. and 5 p.m. London time. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.2500, $1.2437 or $1.2406. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.2624, $1.2698 or $1.2726. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 25 pips in profit. Remove 50% of the position as profit when the price reaches 25 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. GBP/USD analysis. I wrote in my last piece on April 12 that the best approach here would be to wait for the price to reach $1.3000 and be prepared to take long scalping trades, which could be left to run into potentially longer-term trades as this level may begin to act as long-term support. Yet the bigger opportunity will potentially be a strong breakdown below $1.3000 as there are no support levels below that for 200 pips at least. This was an excellent call, both for that day and for the longer-term outlook, as we got a bullish bounce early in the London session off $1.3000, but the final breakdown below $1.3000, which took many days to happen, triggered a very strong 500 pip breakdown over just a few days. The price has fallen hard with very strong momentum. The US dollar is advancing to new long-term highs but is advancing especially strongly against the euro and the British pound. This is partly due to poor UK economic data releases and the IMF's major downgrading of its forecast for UK economic growth, but also due to the economic impact of the war in Ukraine, with concerns exacerbated yesterday as Russia cut off its gas supplies to Poland and Bulgaria, although these nations are not part of the Eurozone. Technical analysis of course shows extremely strong bearish momentum into new 18-month lows, which is usually very foolish to bet against on the long side. However, at the time of writing, we are seeing some initial support happen here at the big round number of $1.2500 at the same time as we see support in the EUR/USD at $1.0500. This confluence may be a technical barrier against further US dollar gains, at least over the short term. It is also true that the pound has been firmer over the past day than the euro has. Today I would be very happy to take a short trade from a bearish reversal from $1.2624 if it sets up. Skilled scalpers may want to try for long scalps from $1.2500. If the price can get established below $1.2500 soon, that will be a bearish sign, and we will then probably see the price resume its strong downwards movement. AUD/USD Forex signal, path to 0.7000 still intact. The pair will likely keep falling as the US dollar strength continues. Bearish view. Set a sell stop at 0.7110 and a take profit at 0.7000. Add a stop loss at 0.7225. Timeline, 2 days. Bullish view. Set a buy stop at 0.7170 and a take profit at 0.7250. Add a stop loss at 0.7100. The AUD/USD pair crashed to the lowest level since February 22 even after the strong Australian inflation data. The Australian dollar retreated to the important support at 0.7100 as data showed that consumer prices are still surging. Aggressive RBA. Data published by the Australian Bureau of Statistics showed that inflation rose at a faster pace than expected. The headline CPI rose from 3.5% in the fourth quarter to 2.1% in Q1. That increase was significantly higher than the median estimate of 1.7%. As a result, the numbers revealed that the CPI rose from 3.5% to 5.1%, which was the highest level in 21 years. Economists polled by Reuters were expecting the number to show that inflation rose by 4.6%. Meanwhile, the trimmed and weighted mean CPIs rose by 3.7% and 3.2%, respectively. These numbers were higher than the Reserve Bank of Australia, RBA, target of 2%. Therefore, analysts expect that the RBA will start talking about rate hikes when it meets next week. Some expect that the bank will actually deliver a gentle 15 basis point rate hike since they believe that it has underestimated the strength of inflation. In the United States, the Fed has been blamed for underestimating inflation last year. The AUD/USD pair declined after the report because of the stubbornness of the US dollar. The dollar index has been relatively strong as investors focus on the rising global risks. For example, Russia decided to halt natural gas shipments to Poland and Bulgaria. It has insisted that these countries should pay for their gas in rubles. Therefore, there is a likelihood that it will also cut shipments to the rest of Europe soon. The key catalyst for the AUD/USD pair will be the latest US GDP and initial jobless claims numbers. The consensus is that the American economy expanded by 7.3% in Q1. AUD/USD forecast. The AUD/USD continued its bearish trend after the strong Australian inflation data. The decline happened partly because investors were expecting inflation to be strong. It also moved below the 25-day and 50-day moving averages and the 61.8% Fibonacci retracement level. It has also moved below the first standard of the pivot point. Therefore, the pair will likely keep falling as the US dollar strength continues. If this happens, the next key support level to watch will be the psychological level at 0.7000.